We have a very special guest, though. We have Shanti Ekambaram, the President, Consumer Banking at Kotak Mahindra Bank, who joins us. And with us in the studio, we have Lata Venkatesh. Lata, take it away.
Thank you very much. And Shanti, always a pleasure speaking with you. Thank you very much for joining us. Well, first up, I think your first love used to be bond markets, and now we have seen this huge crash in bond prices ever since the monetary policy was announced. What is the impact for the saver? Are we going to see the end of at least deposit rate cuts?
So, Lata, I think the reaction to the bond markets was really post-policy when, not so much the cut in the rate, but the hawkish tone of the policy, as you yourself have said, really caused this huge surge in, the bond yields and thus the crash in prices. So I think two things that I see forward. If you look at the last 2 years, and I was talking to someone, 2 years ago you had bank deposit rates at about close to 9%. Now it is about 7%. So savers have seen a 200 basis points drop. I think you're pretty much going to see some stability for some time before banks drop rates, unless the credit demand, which is currently also sluggish, falls further, right? The investment cycle, which is still elusive from the corporate side, still remains very sluggish. So unless we see some dramatic drops, I think the deposit rate stability is perhaps there for some time to come, barring any unforeseen events. So if deposits are going to be stable for the saver, and you've seen a large transmission of rates by banks through MCLR, the lending is also going to be stable. So for some time, you'll see some stability in deposit rates for the savers for sure. Remember, the small savings rates is still at 8.10. So, the government keeping it there, you will see some stability.
No, I'll come to the MCLR in just a minute, the lending rate. But, some banks like you offer 6% even on your savings rate. Is there a chance you will have the elbow room to cut that part, considering the savings glut in the system?
So I think the way you have to look at it is, if your one-year term deposit rates is at 7% today, you still have a little bit of room when you look at the savings accounts, because if you look at the average cost of our savings accounts, it's around 5.5%. Right? We have moved very marginally the top end of the savings band for very large savers like 5 crores and above. But I think you have to wait and watch that if this 7% continues to be stable, you need to see how, so we have some time and some elbow room at an average cost of 5.5 versus a term deposit rate of 7%. Two things. I think banks were flush due to demonetization on account of CASA. But I think if you look at the trend of the last 1 week to 10 days, and you're seeing incrementally cash withdrawals in the system increasing. From Feb 20th and March 13th, when the entire controls on SA is lifted, you will see incrementally cash being withdrawn. And two things I'm seeing, people are now reverting to using cash for their transactions. So I think you will see retention, but we'll have to wait and watch. So there's stability in deposit rates, Lata, some time to go perhaps.
Okay, and in MCLR, you as well, like many of the public sector banks, you cut your lending rate by about 0.5 percentage point. Is that it? Now, should we expect you or the system to cut rates further, given what, a 50 basis point rise in bond yields?
So I tell you, MCLR, firstly, all ALCOs of banks look at their cost of funds, look at their entire asset liability duration mix, and then take a call. So I think if you look at the cost of deposits and cost of funds, those still have not moved. And as a bank, one would clearly look at this is the marginal cost of funds, the way it moves. I think you will see some stability. I don't see banks raising MCLR immediately. But for the moment, perhaps we will have to wait to see if there is any further transmission, because a lot of transmission has happened. So again, even on the lending rates, perhaps you will see stability for some time.
Okay. Well, now let me come to loan growth. What will you all finish FY18? What are you looking to for FY18, and how will you finish FY17?
I think the guidance for FY17 we already gave in our analyst conference, that perhaps in the mid-teens or so, we are probably going a little better than the industry standards. And if you disaggregate the loan growth, Lata, it's really, you're seeing movement in both retail as well as corporate loans. Some parts of the retail loans, I think the SME sector and the working capital is still taking some time to come back. But if you look at the personal consumption space, it is pretty much bounced back to 85–90% of what it was in September, October, which were really, really good months. I think on the corporate side, you are seeing lots of opportunities on the working capital side, on many others. So I think we will, as we had talked about our guidance, say maybe in the mid-teens or so. I think FY18, two things. The consumption story will still continue to dominate the way it looks like because the private investment cycle is not coming back. So it's really looking at how do you gain market share from here. And there is, at our size, there is significant market share for us to be gained on the retail side and on the corporate side, and that would be our focus. So I think suffice to say that we would perhaps our aim should be better than the industry average standards and look at growing both retail and wholesale as we get into FY18.
Okay, so do bond yields go past 7% once the borrowing program starts?
You know, it's an interesting question. I wish I knew. But, you know, less than a month ago, we were all, you know, thinking that you think that it will be 6 on one side or 7 on the other side. But the rapidity with which it has come closer to 7, I think there has been, like I said, a reaction, but it is close to 7, Lata. We'll have to wait and see.
Yeah,
there
it's
is
not
a
a great
risk
distance.
of it getting as close to 7.
Yeah,
it is not a great distance.
10 basis points is not a great deal anyway. Will Kotak look at inorganic moves now? You all put behind a very successful merger with ING, with Vaishya. Is it still looking for inorganic growth?
So I think Uday's statement on that, less than on you know, CNBC itself, less than 2 days ago, is what I would echo to say that as Kotak, we always look at anything that can create value for us. And we have spent the last 2 years pretty much putting together and digesting the acquisition, which we still hope to get much more synergies from, you know, as we go into the future. But anything that can create value makes sense for an organization.
So what is rotating on your axis then?
Well, I'm right now focusing on saying how do we build out the business in the last quarter of the year and budget for the next year.
Okay.
So you'll have to wait and watch, Lata.
No, I mean the Axis rumor just refuses to go away, which is why I'm asking you.
I have absolutely no clue what you're talking about.
Okay.
So my entire focus, like I said, is building out the business. So rumors will remain rumors, I guess.
All right. Shanti, it's always a pleasure speaking with you. Thank you very much.